Apparently, Donald Trump has already made global markets heavily dependent on his statements. It has become clear that the central theme of the US president's policy will remain the introduction of tariffs. Moreover, the geography of his threats is so wide that it's easier to name those countries that have not yet fallen into this cycle, for example, Japan and the UK. On the other hand, since Trump's inauguration, no specifics have followed from him on this matter. Interestingly, none of his executive orders so far have addressed tariffs. For this reason, the US dollar has dropped to new weekly lows. As a result, the six-currency US dollar index is trading in the range of 108.10 to 108.40. So the markets are turning towards economic reports and again focusing on the upcoming decisions on the interest rates of the world's major central banks, Japan, the US, and the Eurozone. At the same time, policymakers in some countries vulnerable to looming trade tariffs have already come up with a reconciliation response. China's vice premier reported in a poem manner saying that the sun would continue shining through heavy clouds and that there are no winners in trade wars. European Commission President Ursula von der Leyen said Europe's top priority would be early engagement and that there is a lot of stake for both sides. That's exactly what Donald Trump wanted is happening, discussing and readiness for negotiations. Of course, von der Leyen wanted that the Eurozone intends to stick to its principles and protect its interests. Bearing in mind the Eurozone's feeble economy, the negotiations will end up with predictable results, not in Europe's favor. Besides, Donald Trump's protectionist policy will slow down the weak economic growth in the European Union. At the same time, inflation in the Eurozone has been going down, being an argument for the ECB to proceed with the rate cuts, unlike the Fed Reserve. Indeed, Trump's second term in the White House disturbed the Fed's agenda for monetary easing. So, according to the FEDWATCH tool, 99.5% of the market expects the Fed Reserve to pause with the rate cuts next week, while approximately 96% anticipate a 0.25% rate cut in the Eurozone. The growing gap between the hawkish Fed Reserve and the dovish European Central Bank will remain the main driver influencing forex rates, and this could explain why the euro failed to break through the key technical resistance at 1.0440, although it stayed within the green channel of 1.0394 to 1.0422. Still, the bearish correction is likely to go on with a test of the support at 1.0375. This may be followed by a rebound and confirmation of an uptrend, breaking through resistance at 1.0465 and closing above this level. If that happens, the rally could extend tomorrow toward 1.0545. The invalidation of this scenario could occur with a drop below 1.0315. In this case, the nearest support to watch would be technical level at 1.0205. If Donald Trump does not steer things up, the euro is poised for a rise tomorrow after the release of economic data. For example, Germany's manufacturing PMI could increase by 0.4 points, reaching 42.9. Other reports could positively impact the euro. For more details on this and other economic data, as well as the potential market impact, check out our traders calendar. By the way, under the influence of economic data, oil prices extended their decline today after an industry report pointed to the first increase in the US crude oil inventories. Since mid-November, Brent crude fell below $79 per barrel, trading in the range of $77.7 to $78.5 per barrel. Other factors impacting the market remain the tariff threats from Donald Trump and the sharper cold snap in the northern hemisphere. At the same time, Western sanctions against Russia's oil industry have already reshaped markets. For instance, India has expanded its support for the Russia ensures in an effort to maintain the flow of oil supplies to its market. Meanwhile, the Russian ruble continues to be primarily influenced by seasonal factors such as the weak demand for the foreign assets and the exporters preparing for the tax payment period. As a result, the dollar ruble settled below the key level of 100. The official exchange rate set by the central bank, effective from January 23, is currently 98.2804 rubles per dollar. So that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow news with us. And see you soon.